YouTube, what's going on? This is TerrenceRe, the active trader, coming to you with a video on talking about gold. We're gonna talk a little gold, talk a little currency, talk a little U.S. dollar. So let's get right to the platform. Let's see if I can get it. Here we go. So right here on the screen, what I have pulled up is the ETF GLD. And so basically this is the ETF of gold. So you can I'll come back. What I'll first do is I'll go to the gold futures, then I'm gonna come back to GLD. I just had this already pulled up. So right here what you have is the gold futures, which actually moves overnight. So this is live right now, even though it's about currently it's 4:11 a.m. in the morning. The futures market, you can place trades in it. It trades all night, just like the foreign exchange market, or you may hear somebody say FX. Um, so the futures market trades all night as well, or 24 hours, shall I say. Only time that it closes is on Friday evenings, and then it reopens Sunday evening. So right here you have basically you have the gold futures right now trading at 2000, we'll call it $2016 or an ounce. I want to say that's how it's pronounced. And you can see it moving. I'm gonna change my watch list over here. This is my regular watch list that I trade with. If you guys are you follow the channel on a regular basis, you'll see that that's my watch list. I'm gonna come over here. Then this is the Tastyworks platform that I trade on 90% of the time. And we'll come over here to where it says Futures CME, which stands for Chicago Mercantile Exchange, which is where these futures products are regulated, and you'll be able to see all of the futures that Tastyworks allows you to trade over here on the side. For this particular video, we're just going to deal with the gold futures for the most part, and I may even talk about silver, but mainly gold. So as you can see on the chart, we have a large run up in gold. This is a yearly chart. Each candle represents a day, and you can see where we had a high right here, where it got all the way to, what is that, 2089. And you can see we had a sharp pullback, and as we're speaking right now, looked like it made a low right here, hit a little bit of support. As you can see with this long wick, anytime you see so this is the body of the candlestick, and this is the wick. So that means that during this day right here, which was August 12th, that the market came all the way down here and made this low at 1874.2, and then it pushed up, and then it closed up here. So an easier way to show that is, I'm gonna switch this from candlesticks to a bar chart. And on a bar chart, you can see it real easy. This right here is going to show you where it opened, pushed down, and right here shows you where it closed. And so if you're looking at it on a candlestick, it would be, the close would have been up here, and then right here is going to show you where it opened. And thus it closed up, so you got a green. Anytime it closes down on the day, you're going to get a red. And right here is where we're at right now as I speak. This is live. It's moving. Okay. So, investing in gold. Now, if you're going to buy bars, I'm not going to talk about like buying gold coins or gold bars. So that's something you can just Google, and if you want to order some gold bars or some coins and store them in your home, you think that one day they may be valuable or something like that, you can trade them in or sell them or keep them and use them. That'll be somewhere else. This is just talking about like basically in stocks. I got some stocks written down that we're going to look at, and we'll compare them and we'll go from there. And we'll go back to the first one that I had up was GLD. This one doesn't have a dividend. If you look over here on the Tastyworks platform, it says right here, I'm going to make this a little bigger so you guys can see it. See where it says dividend and it's blank. So it doesn't have a dividend, meaning like they're not gonna give you send you a check, or they're not gonna put money into your brokerage account, or if you had it set up to reinvest your dividends, instead of you being paid out your dividends like you own a stock like, I don't know, Delta Airlines, General Mills, AT&T, those stocks pay dividends. So you can have those reinvested into your account, or you can have them paid to you. Some people live off of their dividends in their retirement. So I'm gonna pull up one that does have dividends, and then you can see exactly what I'm talking about. GDXJ, which is a gold ETF. So if you want to track gold, if you looking at this, you can see that this chart is moving just like gold. This is a stock. So that means that right now it's trading at, well, when the market closed, it was at $42.96 when it closed yesterday. And it pays a dividend of 19 cents. So with a 19-cent dividend, that means that on every quarter, this one is a quarterly dividend, because I'm showing that they may have suspended their dividend. The last dividend I see on here is December 23rd, 2019. So they haven't paid a dividend in 2020. So that would be something that you would need to look up, like the Google. Just look up the company, put that ticker in, and see. It doesn't look like they have paid one this year. So they may not be paying a dividend. Let's look up another stock. And that's if you want to buy this and hold it and try to collect dividends on it. You may just want to trade this. I'll go over some ways to trade it in just a minute. All right, so we got GOLD Gold. This is Barrick Gold Corp. They pay like an 8-cent dividend, and you see they paid it last on August. They're going to pay one on August 28th. So they have a dividend coming up. So that means that for each share of stock that you own, you will collect 8 cents. So these aren't real big dividend stocks, it looks like. But if you just wanted to own it because you're speculating, you think that gold is going to continue to go up. So if you would have bought this stock back here, then if you're looking at this is around March. Actually, this low right here is March 16th. And if you would have bought this back around March 16th, when it got all the way down to $13, now it's up to $30. You would have made some money. So this is another one, and it's as you see these stars right here, it has LIQ on the Tastyworks platform. That stands for liquidity. So that's Tastyworks is letting you know that this is a liquid stock, meaning that you can buy and sell pretty much at will here at 4 stars. That means you're not gonna have any problem if you bought this when the market opened at $30.13. You could probably sell it right back at $30.12 or $30.14. That's what that liquidity metric stands for. And it's also letting you know as well that you can trade options in here as well. One of the I have another one I pull up, Newmont. Let's see, the ticker for that is NEM, Newmont Corp. And you see it's pretty much the same thing. It made a low of $34. What's that low? $33 even back here on March 16th. Now it's all the way up to $69. So you could have doubled your money right here. Of course, that's picking the low and then, selling at the top. I got another one that if you got a little cheaper one, that if let's say you don't have that large of account, and this one was down to 223. This is AUY Yamana Gold. I think that's how it's pronounced. So Yamana. You can see right here, you could have bought this one down at 223, and right now it's up at right around, what is that, $6.31 over here. So you almost tripled your money over here. So these are the stocks that I went over are just stocks that if you I picked out some of the ones that are the most liquid, that I know off the top of my head for the most part, that are good trading vehicles, that if you just want to buy and sit and hold, that doesn't mean that I think gold is going to keep going up. I just wanted to come on here and throw some stocks out there that you can trade and invest in if you want, and hold if you think gold is going to go higher. Now, one of the things, now I'm going to go back to the futures, because I want to look at something that I would maybe consider doing myself, just to trade, if you don't want to buy and hold. Now, what I'm looking at here, I'm going back to this area of March. March 16th, we got a little low put in, then we got a break above this moving average, which is a Wilder's smoothing moving average that I use, which is equal to the exponential 26-day moving average. You see it pulled up, pulled back. In technical analysis, this is what you would call a flag. So I'm just gonna draw a little trend line, like so, right there. I draw another trend line at the low, like that. I'm gonna take that. Let's go to chart. I'm going to hide all indicators. So we just got a naked chart. And this is what you get. We call this a flag, right? And then I'm gonna show you why you call that a flag. And like I said, this is like basic. You got some of you hardcore traders out there, you already know this, but this is just some stuff that for someone who doesn't know. This is your pole, and this is why we call it a flag. I'm gonna try to make this see if I can make this pop a little bit more, make it easier to see. We'll make it yellow. Here, turn this into, make it yellow. Here, there it go. So you see it, you got a pole here, looks like a flag. And a lot of times when you see it that pull back and then breaks out, it pulled back down and retested it, and then it chopped and took off. So generally that's how you trade a flag. You trade it when it pulls back. You either get in on the pullback, or when it breaks out the top, you buy, and then it's off to the races. You could put your stop, maybe like say I'm gonna get out of this. If it breaks down here, it never did come back. Now look, we up here, we got a top. We came up here in gold. This was on August 7th, and see this big red candle took out, basically is what is called an engulfing candle. And anytime you have an engulfing candle, a candle that takes out another candle, for the most part, just what it says, it engulfed. This candle engulfed two other candles, this big red candle. And then you got another, like an inside bar, or what this would probably be like considered a harami pattern. I'm going to put that, I'll put these terms in the description so that you can Google these terms. And if you want, you want me to see me do a video just on candlesticks themselves, I can do that. Just talking about different candlestick patterns, what they're called. But anyway, so you got harami. This would be a harami, this engulfing candle with this candle, the body of this candle inside of that. Then you got another big red candle, and we continue to go down. Now we got a pullback. So if we were gonna, if what I would look for is for this to maybe give me another red candle and do something, maybe come down in here and maybe start to the downside. I don't think gold's gonna do that, just based on the fact that because the economy is at the S&P 500 is nearing an all-time high. And I'm gonna go look at the futures of the S&P 500, and as you can see right here, this is the all-time high before the coronavirus. Right around that time when it hit, this is it right here, and so you can see that the S&P 500 is at an all-time high. I'll draw a price level. So here is the all-time high right there, and as you can see, we're right there at it. So with that being said, that's why I think gold has been going up, because you got investors and people with the federal, with inflation setting in, and so basically with asset prices going higher and the value of the dollar going down, you're seeing people going to gold and silver. If we look at silver, you see the same thing. You see silver making it right over here at the bottom of March. That's when people start rushing, putting their money into silver. Here's silver with a similar pattern. You got a similar candlestick pattern. You got a big pullback, and then now it's going back up. So what will we get? Is it gonna go up and make new highs, or is it gonna come right here and then give us something playing back to the downside? So you got the same thing in commodities, which is gold is a commodity, silver is a commodity. You had them. I'm now back on gold, and you see how it ran up, and this chart kind of looks like the silver chart, because you got people taking their money and putting it into a commodity, a hard asset, something that they think has more value, and actually they're giving it more value by putting their money there, and that's what people are doing. People are investing in gold. So this is what you have. Now, if you just want to trade it, you don't know where it's gonna go. You have no idea, and that's me. I really don't know what it's gonna do. I know what I think it's gonna do. Now, one of the things that for the Tasty Work platform, up here at the top, you have an IV rank, which stands for implied volatility rank. So they're ranking the volatility of gold, and basically all that's saying is volatility is another way. You may hear some people talk about fear index, or you may hear somebody say how much it moves. um it could be any one of those things. An easy way for me, a lot of times you'll have some engineer or somebody come on and they can give you the mathematical formula for it. I just look at it as they're pricing the fear of movement in the stock, like how much this stock or this future or this underlying that you trade, how much it can move. Generally when you got a low IV, they're not expecting much movement, so it's going to be pretty low. This is pretty high for gold. As you can see right over here, silver is at 56. So one of the most liquid products to trade in gold is the GLD ETF. So I'm gonna go back to my watch list, which I keep it on my watch list. I'm gonna click on GLD, and let's go to the trade tab. And here we are at the trade tab. Where you want to do this is the trade table. And there are a couple ways that you can use the Tasty Work platform to put your options trade on. I like to trade options contracts around when I'm speculating, instead of me buying shares and selling shares. This is a $186 stock. So you just buy one share, you're gonna spend that much money just to, speculate on whether it's gonna go up or down. I like to come here and then I could choose if I wanna um, buy an option contract to get long, or I could sell one as well and not use as much of my capital to do so. But basically, I don't know what the market's gonna do. Period. I'm just gonna model a trade for you. I can't put this through right now, but something that you can do is something called a. Let's just say you wanted to invest in gold. Let's say you wanted to trade gold, not necessarily invest. And over the next 31 days, you think gold's gonna go up. One of the ways you can do it is you can buy a call. You can come right here. Right now it's at 180, 188. So when this market opens up, this is gonna move. This line is gonna move to right around the 80, 188. But you would just come here and you could buy a call. You think the market's gonna go up, and you would pay anywhere between $535 and $545. What I would do personally is do something like a in and out spread, or something. It could be called, you hear somebody call it an in out spread, a box spread, or a debit spread. All it means that debit being I'm going to pay for it. Come right here by right over this line, which is in the money. So I'm going to buy this just like I'm buying this call because I think it's going to go up. But instead of just leaving the call there and paying the 545, I'm going to drop down, skip one strike, come down another strike, and then sell another one. So instead of paying 545, this right here is showing you 90, which 90 cent is equivalent to $90. So that's how much I will pay to trade GLD. And that means that if the market goes up, now the width of this spread is, or another term would be box. So why would it be called a box? Because right here from 186 to 188, that's the width of, that's the box, which is $2, 1, 2. So that means that the platform does it for you. Your max loss is $90 because that's what you're paying for. Max profit is 110 because the width is 2. So then you would say 2 minus what I paid. 2 minus 90 will give me 110. So I can make $110 profit. And that right down here at the bottom it says max profit of 110. So this is called a debit spread, a call debit spread, because I'm on the call side. The left side is the call side. Up here, calls, puts. If I think gold is going down, so I'm gonna hit the clear button. We can come over here. I'm gonna come over here and press, click on the ask to buy. I'm gonna delete that. If I wanted to sell, I will click here. But I want to buy the put. Buying puts means that I think the market is going down and I'm going to profit if the market goes down. So I'm going to buy a put, and then I'm going to sell the put, go up to and sell a put out of the money. The reason why I'm selling this put is so I don't take this put off that I'm selling. It's kind of like hedging your trade, right? So if I just buy this put, once again, it's gonna cost me $545. Now, what am I giving up? You say if I sell this put, now I'm paying $105. My max profit is $95. Max loss is $105, which is what I'm paying. I can only lose what I'm paying for it. My max profit is capped, but also my loss. So what I did was I'm not risking as much and I can't make as much. So if you say, well, I don't want to do that, I want to take it. Now if I delete this and I leave it like this. It says my max profit is $18,155. Basically, that's saying that GLD goes all the way to zero in the next 31 days, which is very small chance of happening. But if you didn't want to cap your profits, you could do that, but you're gonna pay more. Like, so basically, when you want to have an like a unlimited profit, you pay more for it. But if you don't want to pay that much for it, but you still want to take a shot over the next 31 days, you come right there and then you sell this put, which is hedging this put that you bought, and then it caps it. So that's basically an easy way, and that's called one of the things that you can call it. You can call it an in-out spread, and the in and the out just means that basically you're buying one in the money and selling one out of the money. That's the in, that's the out. And when you say in the money, you see right here, I don't even know if you guys can see that, but right here on the platform it has ITM. That's letting you know that here is the money, basically at the money, where the underlying is trading or was trading at when the market closed yesterday. So I went one in, bought it, sold one out. That's in out spread. Another term that is called is a box spread. Box, this is the box. The box can be wider. I just did it. You can go 183 by 188. That's a $5 wide box. You're paying $247 for it. So that means that what's the difference? $253. So that means your profit, max profit, is $253. And the width of the box is $5 wide. Or you can just call it a call debit spread. Debit meaning you're buying the spread. I'll do another video and go over a credit spread, which is a spread that would be selling. But I'm not going to do that in this video. That'll make the video even longer than what it is right now. And so hopefully you got something out of this video. I went over a way to actually trade your assumption. You know, like if you thought it was going to go up or you think it's going to go down, I went to the trade table and went over. Just click on the trade and here you go. And this is the where you can come and pull up the actual option screen and look at. And once again, these right here are the number of days or the amount of time before the contract expires. This contract expires in 3 days, 10 days, 17 days, 24, and that's how much time you would have for your trade assumption to play out. So hopefully you guys got something out of this, out of the stocks that I went over. I'm going to go to recent symbols. Here's Yamana Gold, or Yamana, however you pronounce it. AUY. This is a cheaper one. You know, so if you don't have a very large account, you can buy 100 shares of these for like $6. Now this may not be worth doing an option on, and you can just buy the shares because it's relatively cheap, which is why I did it. Why I'll put that on here, and it's liquid. You see, it has 4 stars. You want to make sure. I only trade stuff that has 3 or 4 stars in it, unless I'm buying something. I'm just gonna hold it. Another one that I think I went over is GDX. This is one that is very liquid as well. You can trade options on it, or you can speculate and just buy shares. Here is Newmont Corp. This is another one that you can trade. You can buy, but if you pay attention to the charts, they all look similar. So it's basically just, you know, how much you want to spend, and what do you think? If you think gold is going to keep going up, you can buy any one of the ones I just put up here and just sit on it and hold it. And maybe it'll push higher. Or if you just want to trade it and you say, hey, I don't really, or you can short the shares. If you think it's gonna go down, you can come in here and you can buy some puts on some of the stocks I just put up, or you can actually hit the bid up here and short shares. Um, you can make money when the stock market goes down. In most of your big hedge funds and banks, that's how they make their money. They're actually betting against the market going down. But before I get rid of close this video, I'm gonna come back to the S&P. Here's the futures /ES S&P 500. We're right at the top, and we being right at the top, as you can see on the RSI. I don't like to buy things when the RSI looks like this. Right up here at the overbought area, forming a little pattern down here on the RSI. I actually think it's gonna break through this line. I think we'll get a break on any type of good news from Congress or anything like that, on a new stimulus bill, or I don't know what they call it. You got the Heroes and the Heals Act. Any good news on that, and this will break out to the top, in my opinion. What I think anyway. Now, how far it goes, I don't know. I think at some point, we will get a move to the downside after this breakout to the top. So we'll just have to, I don't like buying up here, because all it takes is some bad news and you get this again, and that was like horrible. I mean, that was less than 30 days. That's February 20th. That's March 23rd. That's about 30 days in a month. So all it takes is a little bit of bad news and boom. I'm gonna wrap this video up. Once again, down in the description, if you got any comments, comment on something that you want me to go more in depth on, and I will. I hope you got something out of this video. Remember to subscribe at the bottom. Hit the like button or dislike, whatever I like feedback. I need feedback to make my videos better. Share the videos with other people. It helps me out. And once again, I hope you guys got something out of it. Appreciate your time. This is the Active Trader, and I'm out. Peace.